And now we're going to take a look at the markets today. We have Brendan Conway joining us. We know Yelp had a big day on its IPO and some oil prices too influencing things. Brendan, how did things wrap up for us today when we talk about the markets?
Afternoon.
Hi.
Well, we spent the day mostly lower in the major, stock indexes. Last check, we were just down an ever slight hair. I mean, this was kind of one of these days. It's basically flat. To me, though, the real action today took place in smaller stocks. If you looked at the small cap indexes, they were off by 1% or greater the last I checked. What's happening here, and this is also true if you look at fund flows in exchange traded funds, it seems as though a lot of investors are moving away from the real risk-on side of things. They're starting to book profits because they're wondering, if the rally is going to take a bit of a pause here. Certainly, what you saw this week basically is that stock indexes were essentially flat. We talked a lot about these big round numbers. Dow 13,000. Indexes have had an awfully hard time getting above those round numbers that supposedly don't mean anything. It says to me that people are wondering whether the huge gains in the last couple months need to level off for a while.
Forget about all these companies that make things and do things. Tell me about Yelp. This is a site where people go to complain or say that they love the hamburger at this restaurant. Big IPO today, and it's up after its debut.
Oh
65%.
yeah, 60. Yeah,
last I looked.
It soared. I mean, people really went for this. The thing to keep in mind is that Yelp is doing a very similar strategy that LinkedIn and other social media companies did. They float a relatively small number of shares in the IPO to make sure that they have this first day boom. What you've seen in the other cases, and something people need to watch for, is that the follow-on trading is a little disappointing. It certainly was the case for LinkedIn. Groupon, I believe, still hasn't gotten back above its IPO price. My guess is you're going to see something similar here.
Oh. I know. Well, Angie's List, though, is a
Sorry,
similar
guys.
company. One good thing, and they say one of the reasons it may have been doing so well today is because Angie's List has been able to kind of maintain a little bit of that first day enthusiasm, not quite as much, but
no, sure.
But again, the same online review type company.
I think it's interesting. These sites that use content generated from users for free that give information will do well because they are sort of this. They have low costs. They just set up the platform and let people do all the work. So,
but I'm kind of skeptical about some of the reviews. I always I don't know why. I mean, maybe it's just me, but I always wonder: is there somebody whose father, who owns a restaurant, sat on the computer and wrote a bunch of reviews? There's a little cottage industry of people who go in. Or the opposite true: somebody who had just one bad experience where a waiter spilled something and they are outraged and they go on and kind of blur
my general sense is that people take a handful of reviews with a grain of salt, and a bulk of them is meaning something. And the whole point of social media, right, is that you can kind of draw a message from the din.
And
certainly
up 63%
they're tapping into that.
This stock was
if you're an investor, how do you rate the Yelp IPO on Yelp using 5 stars?
I have no idea.
I'm going to give it a 3 for potential.
There we go. Well, thank you, Brendan, for joining us. We appreciate it. Have a great weekend.
Brendan.